All right, good afternoon, everybody, and welcome back to another episode of The Debt Life with me, Chad Van Horn. Today's topic is 1 year later, a checkup and a check-in on your financial health. Now, before we get into it, I want to hit a hot topic that everybody's calling in asking about right now. You just received your stimulus check, you just received your tax refund. What do you do with that money? Now, I'm not going to recommend investing it into Bitcoin or GameStop. I'm certainly not a financial advisor that would recommend taking risks like that. But I do recommend prioritizing what you have to pay. I talk about this, I feel like, every episode. We only have a certain amount of money coming in every month, and we only have a certain amount of funds, and sometimes our bills exceed that. So obviously you want to focus on the bills that are most important to you, your light bill, your water bill, your rent, your mortgage payment, and down the line. So before you get to those credit card payments, and I know everybody wants to pay their credit cards and earn their points and keep their credit up, and we're going to talk a little bit more about that later. Make sure that you're always prioritizing and putting a budget together what you need to do with that money. Also, don't forget to have that fund, that savings fund, that emergency fund, just in case, because the worst case scenario would be you take that money, you put it into credit cards or something else, and then you have another emergency happen, and then you don't have the money to take care of that. So don't just waste that money. This is an opportunity to make sure that you're utilizing that money for something important, like keeping your lights on, keeping yourself and your family with a roof over your head. So if you need any help with that, obviously you can contact me and we can go through the budget and prioritize what that money is going to go to. So, all right, moving on. One year later, this has actually been exactly 1 year since Broward and Dade County did the stay-at-home order, shut down schools, bars, nightclubs, gyms. It was crazy. I came back from my honeymoon with my wife. We were in Asia, came back, and we came back to a world that we didn't recognize. I know it was stressful for me. It was stressful for Gabriella, and I know it's stressful for everybody that's watching now. So at that time, we thought that maybe 2 weeks would get it done. We thought maybe a couple months that we would have to wear masks or shut down. And then obviously a year later, we're still dealing with some of the same issues. Some of the issues that I'm seeing that were caused by COVID, higher credit card debt utilization because people lost their jobs, especially in those industries that I just talked about, restaurant industry, gym, obviously clubs, a lot of the clubs are still closed. People had to use their credit cards to live, to buy groceries, to pay rent. A lot of small business owners over the last 12 months too have unfortunately closed, even with the PPP and other loans that we've discussed in other episodes. There's many different ways to deal with that, from bankruptcy to negotiating and everything in between. Obviously, we can go through that with you individually. You want to make sure that you keep things in perspective. Obviously, everybody wants that 700 or 800 credit score. Everybody wants to be able to pay their bills, but just because you can't doesn't make you a bad person or anything like that. And credit can be rebuilt. Our clients 12 to 18 months after filing a bankruptcy are getting a 700 credit score, qualifying for mortgages, able to get good interest rates on vehicles. So don't think that it's the end of the world that your credit's taken a hit. Unfortunately, many people's credit has taken a hit over the last 12 months. And even before that, we had a significant debt issue. Stephen, good afternoon. Thanks for joining again. I appreciate you. Guys, if you have any questions, as a reminder, I'm going to get to the questions as I can. Any comments, feel free to type them into the chat and I will address them as we go. As I spoke about a little bit earlier, you need to really build that budget for you and your family. Look at your bank statements, understand what's going in and out. A lot of people don't realize what they spend for different things, whether it be going to restaurants or what the true cost of ownership of that vehicle when you take into consideration maintenance, gas, which gas prices unfortunately have gone up significantly as well over the last couple months. So really update that budget if you haven't for a while, and then just really take a hard look at your finances. The stock market obviously has been crazy and has gone up over the last year, which we could do in probably an entire hour or probably day looking into the why of that happening. But that could be good for your retirement account, which is another place that you could look if you're having significant hardship at making payments on things as rent, mortgage payment, and whatnot. Obviously, if you plan on retiring one day, try not to tap into that. But if it is an emergency, there are different things under the COVID Relief Act that will allow you to tap into your retirement accounts without penalty. When you're looking at that budget as well, try to get your family involved and have a discussion with them, letting them know that we only have a certain amount of money. Maybe it's because you had reduced income at the time, or maybe when we're going to talk about the stimulus, you're getting an enhanced unemployment during that time. And always, I know that these online retailers, Amazon, Best Buy, and everybody else, they're really good at advertising the new TVs and everything coming out. But try to stick to the necessities. That's going to be most important. We had a client that went through job loss and then fell behind, lost their car, got a judgment against them. When they started working again, there was actually an act of garnishment. So I just want to tell you a little bit about their success story. They came in, we were able to stop the garnishment immediately, get the car back, which they needed to be able to work. Unfortunately, in Florida, we don't have the best exemptions for vehicles, and it allows creditors to take cars, repossess cars as soon as you're in default. So as little as 30 days, we're seeing more of 90 to 120 days. So just be on the lookout if you're falling behind on your car payment. I know I've said it before. Contact whoever your lender is for that vehicle. Try to get into some deferment or forbearance plan, especially if you need the vehicle to get to work, because that's going to cut off your income potentially as well. Another story, it brought tears to my eyes. Actually, I had a client call me earlier this week. He said that he was actually getting ready to commit suicide, and he saw our commercial, and it gave him hope. And our team was able to, talk him off the ledge, literally, and deal with his debt. So I know there's a lot of mental issues that are happening from this, from not being able to socialize and dealing with stress. And in this situation, there was a divorce, there was debt. I mean, there were a lot of issues that we're going through. But remember, one step in front of the other, one foot in front of the other. You can rebuild from this. So don't do anything that obviously is going to be harmful to your health or your future. So. Moving on to the stimulus. So we have the stimulus package just came through. Another stimulus package just came through. The checks were direct deposit or mailed out. So you should receive them, or you should have received them now. They're around $1,400 with some different restrictions depending on your income levels, and we spoke about that before. The unemployment benefits are now $400 a week instead of the $300. There is also utility and rental assistance. There's $5 billion set aside, as well as an extension to the eviction moratorium. So using this time where creditors are slowing down a little bit to strengthen yourself financially, I believe is the smart move, especially if you're experiencing job loss and you can't find another job. Really try to stockpile as much money as you can to make sure that you're ready to make that next move if you're too far behind as far as rent or on other bills. So you want to try to get a clean break, whether that's filing bankruptcy after you move or trying to settle the debts. Make sure that you're really thinking. It's hard not to think day to day whenever you're struggling from unemployment or other financial insecurity, but try to think long term as well. Try to sit back, get away from that stress, and come up with a plan long term. Because too many of us just get focused on that day to day. I just got to survive the day. I got to survive the month. But look a year out, look 5 years out, and get back to that long term planning. Things are looking more positive. We're getting the vaccines. Things are opening up. Knock on wood, we're not going to have a relapse of this, and then we'll get back to normal life here shortly. And then from there, you obviously want to not just build but thrive eventually again. Also, there's billions of dollars set aside for event venues as well. So if you own event venues, I know I recommended I uh, I recommended to event venues just try to survive through this, and I represent some that have survived and that are applying for these different loans out there. So if there is government assistance, make sure that you're reaching out to it. Now, a lot of people are asking about my financial predictions moving forward. There seems like there has to be a market correction. I'm not a market guy, but I see so much pain financially from individuals and small businesses that I just don't think it has gotten to the higher levels, the Wall Streets of it and whatnot. So I believe that there's going to be a market correction. As far as the real estate market in South Florida, any of my realtor friends that are on will tell you this market is extremely strong right now. There's low inventory. A lot of people are buying from out of state and out of the country. So I think that that'll level off. I don't think that we're going to have a correction like we did back in 2006, 7, 8. But the interest rates are going up a little bit. That might slow it down. But I do see, and I just actually spoke to one of my attorney's friends who listed her house, and it was sold same day, full asking price. And I'm hearing a lot of those stories right now. So any of our friends that up north that want to move down, you better get in now before the market gets away. I see a couple questions coming in. Christina, I'm in the middle of a lease and they're threatening to evict me. How long can I remain in the property after I file bankruptcy? So bankruptcy will slow down an eviction process. If you're doing a Chapter 7, it'll just slow it down for a short period of time. Generally speaking, you're looking about 30 days. Also, you got to look for that eviction moratorium. There are exemptions to that. If you're out of your lease, they can still evict you, and if it's not COVID related, so if it's not because you can't pay, then they can still move forward with the eviction. Chapter 13, if it's a longer term lease, you can actually make up back payments over time, but you have to stay current moving forward. So that can be an option as well. Lydia, what do you recommend the best way to use your stimulus if you're behind on credit? Again, as I said earlier, you really want to prioritize. I know that people want to pay their credit cards and they have the money that comes in. Prioritize things that can be taken away from you, like your vehicles, like your residence, like your house, FPL, Comcast, things that you might need for video conferences like this before you start paying your credit cards. And I'll take one more question before moving on. Sonia asks, what are my options for stopping a foreclosure if your income is much smaller now? I'm actually going to talk a lot moving forward about the different forbearances and deferment that banks have offered. So a lot of the mortgage companies are offering deferments or forbearances, which are good, but the problem is at the end of those deferment or forbearances, the full amount is due. So you have to reach out to them and work out a modification. We're getting a lot of calls right now where people thought that they were just going to put that on the back of the loan automatically, which is an option, but they're not doing it automatically. You have to go through basically and re-qualify for some sort of modification. The good thing is a lot of the modification systems are put together from the 2008 crisis. So the banks and the mortgage lenders already have these systems in place to process a ton of these applications, which are going to come through. And I'm guessing over the next 4 to 8 months, we're going to see a lot of the forbearances end, and then we're going to have to get back into normal payments. So what I'm recommending is communicate and document your communications with the mortgage company. Give them every opportunity to work with you. Obviously, money doesn't solve every issue, but money solves financial issues. So if you can find side gigs, work side hustles to get those get your revenue up, that could offset some of the debt that you have to deal with. Certainly recommend that. There's tons of online companies. I use Fiverr, Fiverr.com, and Upwork. I use a lot of freelance people from that, from helping design logos to helping come up with blog posts and whatnot. So if you have other abilities, utilize those abilities and get paid for those. So that's a fantastic question. Thanks for that. Now, a lot of people in the restaurant industry especially, talk about this term pivot. It originally came from Silicon Valley. And basically, pivoting is you have one business plan and you kind of have to change your business plan. Sometimes it's because of market conditions, and sometimes it's because a pandemic hit. Now, I have one of my clients, restaurant business clients, believes that once they get out of this, they're actually going to be more successful than they were prior to COVID, because they never did takeout before, and they didn't realize that there was actually a market for their takeout food, because it was a higher end establishment. And the takeout industry obviously took off like crazy starting a year ago when they were only allowed to do takeout. And then when the restaurants started opening up, not only did they have a full business, but they also had the takeout industry. So their revenues were up 20-30%. And if you're seeing South Florida right now, we're inundated with people coming in from other states that are restricted. So you're seeing revenues that were in January and February that were actually higher this year than they were last year when things were still wide open here. And so if you have a business where you came up with different ideas, and I see commercials where you're seeing other businesses using Zoom, using Skype. I wasn't doing these a year ago as well, because not as many people were online and this wasn't normal. So if you found things that were working for you during the COVID time, figure out a way that you can integrate those into your business and maybe drive revenue in a non-COVID environment as well. So when it's time to pivot to a new plan, and maybe you can integrate some of the old revenue options with the new. So let's see if we have some more questions here. And we do. Tatiana, I co-signed for an ex. They're pursuing me to recover the funds. What are my options? So I think I've used this line before. My business law professor back at Robert Morris University, Dr. Larry Paper, said a co-signer is an idiot with a pen. He never recommend co-signing on anything, especially when it's boyfriend, girlfriend, or a spouse or whatnot. You never know if that person is going to make the payments on it, and if they don't, you are fully responsible. In the state of Florida, we have something called joint and several liability. So they can collect 100% from you, and then you can go after the other co-signer for the 50% for what's called contribution. So if you can avoid being a co-signer, and I know that families, it's always that one person that has the best credit. They utilize that credit to get the lower interest rates, which in theory does work, but life happens, pandemics happen, things happen, and then all of a sudden you're liable 100% and your credit's taking a hit, so that you can't even help yourself buy a house because everything you were responsible with your finances, but the person you co-signed with wasn't with theirs, and now it's negatively impacting you. So be careful with that. Try to avoid co-signing if you can. Because it definitely can come back to haunt you. Jonathan, can you refinance your home in the middle of a bankruptcy? Yes, you actually can. So if you're looking to take advantage of a lower interest rate, you may have to get permission from the court in a Chapter 13 or a Chapter 11. It is required, and in a Chapter 7, but it's less likely in a Chapter 7 that you're going to do this. You are required to get court permission to do this. If you can take advantage of the lower interest rate and lower your monthly payment, certainly recommend doing that. Interest rates are still historically low for mortgages, so you can still find those 3 to 4% interest rates. So if you did it years ago and you're still at a 6-7% interest rate, that might be something that can free up some money for you. So, Melissa, do you offer payment plans for the attorney's fees? Absolutely. So we realize that people are really struggling out there. So whatever service you're looking for with working with us, we're going to offer you a payment plan. We're going to figure out a way to make it affordable for you. Just got off the phone about an hour ago with a gentleman, a veteran, who has a lot going on in his life, only has $1,100 a month income coming in. But he really needs a bankruptcy because he's scared that they may offset his income. So we ended up doing a pro bono where we're going to try to get the filing fee waived, and he's literally going to have to come out of pocket $0 for that. My team works on cases like that every month. So if you're really struggling and you can't even afford the court's filing fee, which is $338, we'll find a way to work with you. If you're struggling like a lot of people are and you need a payment plan on that, we'll work with you as well. So we certainly understand that a lot of people are struggling out there, and we want to make sure that we take good care of you. So these are all fantastic questions. So going back to planning for the future, and keep the questions coming in, guys. When you're planning for the future, if you need outside help, get it. Sometimes you're going to miss something that somebody that's experienced in putting these plans together, or have seen other people succeed or fail, can give you advice. So we do it all the time. People come in with their bank statements. They'll come in with their budget, and we help right size their budget. Sometimes you just need a third party that's not going to judge you, and it's just going to come up with a plan. So I get those calls, I get those emails all the time. Feel free to email or call me. The information's on the bottom of the screen right now. It doesn't have to be some long 3-hour meeting. A lot of my meetings are 15 minutes to a half an hour, or a quick email back and forth just to point you in the right direction. I get Facebook messages. I've gotten Facebook messages today, text messages. Whatever's the easiest way for you to communicate with me, I will certainly communicate back. And if you're a friend, or if you're just somebody that's logged on right now, just make sure you reach out to me. Like I said, everything that we discuss will be attorney-client privilege. Certainly not going to judge you. We're all going through a lot right now, and I just want to make sure that I give you the helpful advice that you need. All right, a couple more questions, and then we're going to wrap up. It's amazing how these half an hour just fly by. So, Susan, you have a small business impacted by COVID, and it's starting to get back on your feet. What can you do about past rent payments? That's a significant issue that I'm seeing, especially with different entertainment parks. There's a couple options there. Obviously, the first option, I always recommend reach out to the landlord, try to work something out with them directly. If that doesn't work out, then we look at the Chapter 11 option, where we can make up the back payments over a reasonable time. Some of the landlords have been able to work with us through the payment plans. I've had some creditors that we've extended payment plans for 10 years, and others are not so understanding because it has been a long time. So if your business has been closed down for 10 to 12 months, or limited income for 10 to 12 months, and you had a significant rent due for those months, and I've had clients $20,000 to $50,000 a month in rent for these big spaces. It might be time where you just close that down and then start anew. I know that's easier said than done, but I have tons of success stories where they've done that as well. So don't get discouraged. Work through it. If you guys have any other questions, make sure that you post those right now, or you email me. We're gonna wrap up this presentation. I hope that it was helpful to you guys. If you ever need me, you can call me at 954-637-0000, or go to vanhornlawgroup.com. You can message us through that, or you can email me at chad@cvhlawgroup.com. We have weekday appointments, we have night appointments, morning appointments, weekend appointments. Also, there's 2 books available: The Debt Life, that tells personal experiences about how we've impacted clients' lives, and we have Bankruptcy in Florida. We also have a Spanish book coming out. It's Bancarrota in Florida. My Spanish isn't that great, but I had a lot of help translating that for the Spanish audience out there. So thanks again for joining me in this episode of The Debt Life. If you ever need anything, make sure you reach out to me. I'll see you guys again in 2 weeks. Thanks again.